Welcome back, and let's take a look at the commodity space now, where we have seen the agro commodities as well approaching 2018 slightly on a negative note. If you look at the corn prices, those perhaps are the only ones which are perhaps closing 2018 positive, up about 8%. But almost everything else, whether it's coffee or sugar or even the cotton prices, all of that hasn't seen a very good 2018, so as to say, and there has been plenty to follow as well in the markets. Carlos Mera of Rabobank now joins us on the phone line from London to help us understand on what really happened in 2018 and how should you be approaching with your investments and strategies in 2019. Carlos, hi. Thank you so much for taking time out for us. First of all, let's get the elephant out of the room. It really has been, the talking point really has been about the US and China trade concerns that not only impacted the other asset classes, but the agro commodities also in a big way.
Yeah, absolutely, Manisha. Hi. Definitely, some markets have been dominated by geopolitics. That's obvious in the case of soybeans, also in the case of corn, and a few other commodities related to those. However, as you mentioned, this is a broad basket of commodities that have been coming down, also sugar, coffee, etc., and those commodities are unaffected by trade wars. And prices have been coming down because weather has been pretty good so far. And I'm not saying it's going to continue to be good. Actually, we're looking at a very high possibility of El Nino. And as you may know, part of India has been very dry. We see dryness now in Thailand and the Philippines. So that very good weather pattern may be starting to change, especially if El Nino continues to form and strengthen. And also very weak currencies. That was the other factor driving prices down this year. The Brazilian real, we are seeing it even after elections that were market friendly. We don't see it appreciating anymore from very low levels. Of course, very weak currencies in Russia, Ukraine, etc.
So, Carlos, what is your sense? If we go commodity by commodity, what is your sense now on the sugar prices? Because India, of course, seems to be just about coming out from a very bad period for the sector itself, because the sugar mills haven't been making any money. But where with the sugar prices are right now, and with the kind of export numbers that we're talking about, at least right now, how do you look at the Indian sugar industry and, of course, its impact on the global markets?
Well, India, now the largest sugar producer, is key for the market. So all the sugar analysts is currently looking at India. We do see this crop being very good, probably better than expected. The current crop. I mean, in some states, the harvest started a little bit earlier. In Uttar Pradesh, though, very late. So but the general feeling is that it might be higher than expected. The major concern, unknown export volumes. We believe exports may be close to 3 million tons. We think it may reach 5 million tons. But the big unknown is next year, 1920 in India, because we are seeing rapidly declining moisture levels in Karnataka and Maharashtra. So 1920 is completely unknown. We do see a potential for a large drop. Of course, ethanol consumption may go up, and also we have a lot of political uncertainty.
Oh, well, absolutely. Carlos, I was actually coming to that because you mentioned the political uncertainty. You also talked about whether it is about global concerns as well. So what is your sense, the overall agri space in the global markets and India? How are you approaching it now for the new year?
Well, we are a little bit bullish, to be honest. As I mentioned, dryness, India, big question mark. Thailand is likely to go down a little bit. Philippines is not a big producer, but it's very, very dry, so the crop there will be suffering. And we are also a little bit, we see some support for sugar coming from Brazil. We believe prices will have to trade to a level that will incentivize Brazilian mills to produce a little bit more sugar and a little bit less ethanol. Next year, many unknowns because we don't know the price of energy prices next year, but overall, we think these prices are likely to go up probably by 1 cent. Our current focus is for 13.7 cents in the next quarter. so that will be up from 12.5 currently.
Carlos, also, how are you looking at the currency play here? Because the strength in US dollar has been yet another reason that has led to the global trade actually seeing a bit of a pressure on for the agro-commodities as well.
Yeah, of course, the dollar is very, very important. However, particularly for sugar, the Brazilian real is key. We do have a neutral currency outlook going forward, but there's a lot of uncertainty in Brazil. I mean, we have a new government starting the 1st of January there. We don't know exactly, what measures they might take. They are likely to keep supporting the ethanol market there. But yeah, there will be many announcements. This new government is largely unknown. It's a wild card. So I wouldn't be surprised to see a lot of currency volatility in the first, like in January, February.
Carlos, so as we get into 2019, if you had to put in two categories on what commodities, agro-commodities that you think are bullish and bearish, what would you pick and put in each basket then?
Well, of course, soybeans will be very volatile, and we think maybe a little bit bullish, potentially very bullish in case that there's an agreement between China and the US. We are very bullish in cotton as well, and cocoa and coffee. Those are all most bullish commodities.
And what are you counting when you talk about the bearish commodities here?
We think we are near the bottom, to be honest.
Okay.
We think we are near the bottom. We may see a little bit of a potential drop in wheat. But that will depend. There's a big meeting in Russia tomorrow, and internal prices in Russia have been coming up. They may have restrictions to exports or some measures being taken there. So we may see a lot of volatility tomorrow. But with Russia drying up, we may see more demand from the US in the short term. But for next year, we may see a drop, particularly because wheat production in Europe is likely to recover.
And it wasn't just the agro-commodities. The non-agro space has been quite buzzing as well, and all on the weaker side, actually. Tigran Sekar of Comtrends now joins us to talk more about that. Tigran Sekar, hi. Nearly 4% of decline in the crude oil prices yet again. How are you reading that? And what, I mean, there hardly seems to be a direction here except that we are making lower lows.
Absolutely. I think, the market is still, recovering from the OPEC announcement shock. The best part is, it's a positive news that came, but still, the market is not ready to look at it that way because there's clearly a supply glut which is underwhelming crude prices at this point in time. And let's not forget we're at the year end, so there is going to be a lot of position which are yet to be cut. If you look at, if you compare crude with, let's say, gold or other commodities, they've all moved from a net short position to a net long position on the speculative side. But crude is something which was net long in the beginning of the year, and now we're seeing it net short, or turning to net short now. So, that's the force of speculators when they move out of any commodity. Clearly in crude, I think they're mercilessly exiting positions. And technically we see that, we're nearing a bottom, but it's difficult to put a number here. Maybe $44, maybe $43 or thereabouts.
Yeah. So, when this is also the time that we see reallocation or weightages being given to a lot of asset classes, etc. I know it's very early because we start seeing that from the first week of Jan sometime. But what is your sense, the way the crude prices have behaved? And no, nobody's really writing it off right now because we still have those $65 to $75 per average of forecasts coming in for 2019. How have you been reading that?
Well, I think, crude continues to be the largest, effect in the overall basket of commodities when you look at rebalancing. I think the prospects also going forward are looking okay. Like you rightly pointed out, the average price is still going to remain firm. And as we know, there is going to be a floor at the lower level because, OPEC will continue to take some even drastic measures to sort of shore up prices from lower levels. So keeping that in mind, clearly, I think the crude will remain the largest driver in the overall commodity basket going forward too. That won't change. But weightages will change to other commodities. Overall, I think the commodity space is highly oversold compared to asset class like equities, which is kind of overpriced. At least that's what they say. So that way, I think most of the commodities are going to come in favor in the coming year, especially the ones which are attached to the equity markets, like metals and all that, because they have been the prices have been lingering at the lows for a long time now, and capacities haven't added at all. So we will see a very bullish year for metals as well as precious metals.
Yeah, that is good to hear. So, one final question, as I was asking Carlos as well. So, if you were given two baskets, where would you put your bearish and bullish when it comes to non-agro?
I lost you, Manisha. Sorry.
All right, unable to hear Gnanshekhar on that. But as he said that commodities, the non-agro space, of course, is perhaps going to be in favor in 2019. And he seems to be putting his bets on the metal space, precious as well as the industrial metals.